Welcome to Trade the MBI's ongoing series of traditional indicators, trust and trade, or fear and stay clear. So today's topic is going to be one that everyone uses, and that would be moving averages. 1 and 2 crossovers, so we're going to take a single moving average and also use a crossover of a double moving average. So as always, we like to go where first? Straight to the code itself. And in this case, TradeStation uses an interesting one for the average. They use an average FC, and that is a function that goes through and basically takes the price by the length, multiplies it, and that creates the moving average. The neat thing about it is you can also add in other series like, relative strength, things like that. So it's very useful as far as programming goes. But back to our code, we have a couple of interesting items in here where they put in the counter, and that's just to get you past like the first bar in this, so you don't have the immediate signal just because the chart starts. So here's the moving average. This particular case happens to be a 9-period EMA, and they prefer 9 periods and like 18, but let's just turn on moving average number 1 and see what we get. And it's just ridiculously stupid. So, awful numbers. I'm just going to scroll through here because it's just crazy. Wouldn't even be worth trading that. So fine. Come through a single moving average. Not going to do it. Let's go ahead and get rid of that, and we're going to add in additional line. So this will give us a 2 moving average period, and you can see them back and forth there. So the next thing we're going to do is just take that strategy off and look at what we're going to do with the code. So similar to the same one, now we have a 9 and 18 period, and we're going to get across above and below. And you can see like it has the market position in there, and that's critical because that lets us know that a trade is in place so that you don't get it shorting when it shouldn't. And then like the bottom one here, it says -1, meaning it's a short position, not a long position. So all that covered, let's add it in. We can see that we have our 918, and well, we should go ahead and take a look. It looks fairly decent right here, as you can see the different crossovers taking place. So maybe this one's going to be better. Let's go to the performance report. It's profitable. It's about the best thing you could say, but RINA index, ugly. It's not even worth looking at. And everything else, annualized profits, not good. Equity curve up and down, that would beat you up real big. Drawdown, geez, nearing 10%, 12%. Just nothing good about that. So let's just put a big X across it, and we're going to no EMA trading period, because it is just going to cause you to slide down a slope that there's no recovery from. And so the easy thing now is on our quiz, we're going to go to the question. Moving averages, portfolio friend or foe? We already know the answer. Moving averages are a portfolio killer. Don't do it. Stay away from them. It's interesting, and it's something we'll explore later, but you'll note that moving averages are used in most of the other indicators that people are touting as the best way to forecast market moves. As always, though, trade well.